Welcome to Yellow Tunnel. My name is Mark Rappel. I'm CEO and founder of Yellow Tunnel. Today, I'd like to go over current market conditions. Get ready for CPI data tomorrow, which should move the market. Interest rate sensitive stocks, especially, should move the dollar. And we also have earnings season starting on tomorrow. Delta Airline tomorrow, Progressive, and JP Morgan, Citigroup on Friday. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. For those of you who are new, the difference between Yellow Tunnel, maybe some of the other services, is that we are heavily invested into artificial intelligence and technology. So my background, I have a master's degree in computer science. I worked as a CTO for several publicly traded companies that went public in fintech space. And I assemble a team of financial engineers that have PhD in economics, physics, mathematics, and they are building models, they're enhancing models to provide valid signals. In addition, I take these signals and I trade them in live trading room environment, which you can participate either live or watch the recording. And I've been doing that for over 20 years. So that's my background. I'm going to go through specific trade ideas, right? We talked about Delta Airline. We're going to get ready for JP Morgan on Friday. We have rotation between value stocks and growth stocks, and today semiconductors were leading the way. So we'll talk about different sectors, different opportunities in the market. So it's very important to understand the risk associated with trading stock or options, right? Because trading, it's all about probabilities. There's never 100% certainty, but you always can set up a trade based on probability of success and return on capital, right? Distribution of different possible outcomes. So I encourage, if you're new to trading, I encourage you to visit optionstrading.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing my own account based on my own risk tolerance level for general education information purposes only. Right, before we jump into a trading plan, let's talk about current market conditions and what can drive the market, right? We talked about JP Morgan, Delta Airline. Let's talk about spiders first. So if you look at the news, right, we had Powell's speech for the past 2 days, basically driving the market to the upside because the economy is still resilient and he believes that we are can orchestrate soft landing. And that's what the market believes in. And this is just affirmation. So the market continues to trade at all-time highs. Tomorrow we have CPI data, right? Depends on if it comes with an expectation, it's higher highs, higher lows. But if we do have a reversal where the data ticks up, right, monthly data or annual, year over year or months over months, if it ticks up significantly, that could derail, right, the interest rate policy. That could be again higher for longer, and then the market will sell off or pull back at least. Going into the event, the expectation, it's a pattern of lower highs and lower lows. Everybody expects interest rates to continue to post new lows, right? So we have a pattern of since May, pattern of lower highs and lower lows, and that channel could continue, right? We're right now at the important level 420. So if we break below 420 tomorrow, that would be a bullish sign. If we rally above 450, I think that would be a bearish sign. Dollar also pulled back on geopolitical uncertainties. We had elections in England, we have elections in France. These risks are now out of the way, and you can see that dollar had pulled back significantly, which is bullish for the stock market. High yield continues to trade higher. That's bullish for the market. One area of concern is Bitcoin. Bitcoin dropped below 60,000. It's staying below 60,000. It's close to 200-day moving average. It's sold off significantly. So that's an area of concern, right? From seasonality point of view, July usually is strong months, but then going into August, September usually is bearish months, especially with the elections year. So this earnings season is going to be very important, right? The next 2 to 3 weeks will be important, and macroeconomic data, inflation data is going to be very important. But for now, Bitcoin is underperforming, and in terms of stocks above 50-day moving average, we had a tick up today, significant tick up today, but still below 50-day moving average, still below 200-day moving average. It's still a pattern of lower highs and lower lows in terms of participation, right? Your small caps, your mid caps, your home builders, your transportation stocks, industrials, they have been at least lately lagging. So that is an area of concern. Any questions in terms of the market conditions? So in terms of spiders, we are at all-time high, 561. You know, how the question today in live trading room, you know, how far can spiders go, right? How far can spiders go in terms of positioning, right? Where's the levels of overhead resistance? So options data, dealer positioning, gamma exposure is a very good way to kind of see the supply and demand, right? To kind of ascertain where the main support and resistance levels. So right now, last time I checked, 545 is your support, pretty well positioned for July 19 and even August 16. And overhead resistance is at 570. So we are at 560. We have some resistance at 565, a little bit more at 570. This is for this July, right? July 19th. Going into the August highest position, 575. So there's really not much overhead resistance until 575. So the market on positive earnings and better than expected inflation data could rally another 3 to 4%. And even then, this is a pretty small position. So, you know, there's very little demand for the calls, not a lot of call selling. So that can continue to push the market higher. On the downside, first major support is 540, right? 540 is where the first level of defense, the highest positioning is at 520, right? So with earnings season is weak and we do have worse than expected inflation data, people are aggressively hedging 520, 530 level, and I think that's where the market can find the bottom, you know, in the months of August. So those are the different distribution of different outcomes, right? There's no certainty, but one is 540, that means 50-day moving average, right? The other outcome, we are, you know, breaking above 570, 575, right? So first outcome, you know, earnings season is strong, inflation is down. We're approaching elections, and usually July is very strong. We break above 575, so it's more than 3% gain. Scenario number two, we're trading in a range between 575 and 545. That's where most option traders think the support and resistance level. And if we have, you know, negative news, you know, maybe break below 50-day moving average. Right. Scenario number three, going into end of the Q3, right? End of the Q3, end of August. So how many of you say we're gonna rally and break 575 by, you know, end of summer, end of the Q3? How many of you say no, by end of the Q3 we'll just stay in the range 575, 540? How many of you say 3? You know, unemployment rate is coming higher, even though at modest rate, but it's ticking higher. Retail sales are down, home sales are down, so economy is cooling. And there's still a lot of geopolitical risks out there. You know, there's a lot of distressed debt that's coming due this year and next. And at any given point, we could have, you know, regional banks default, etc., etc. So how many of you say 1, we're going above 575? 2, Luis, thank you. We're staying in the range, and 3, you know, there are signs of recession percolating, and maybe by end of Q3 we will start seeing signs of recession, or at least reacceleration of inflation data. So how many of you say 1? How many of you say 2? How many of you say 3? Let me know. Anyone? Jen, Luis, Mauricio, Peter, Robert, Trader, Carlton, Werner? Anyone else? All right, I'm gonna go with 2. I think we are range bound looking at the dealer positioning data. Looking at our own model, right? If you look at the aggressive power trader from today, this is the model that shows short-term signals. We've seen AMAT today, right? I traded AMAT. So these are short-term signal. I was able to capture close to 1% gain, I think, by end of the day. If we are able to load the data, let's see, orders, why are they not loading? Oh, no, okay. So I was able to buy, let's take AMAT. So I was able to buy it at 252.28, closed half of the position 254. So close to 1% gain, and then I'm looking for 2% gain. So these are example of short trades, aggressive power trade. You can do the same thing using options. We do suggest buying weekly or monthly options, at the money. Delta 70, Delta 80 is usually probably the most optimal strike if you do decide to trade options, but you still want to use these signals, 240 and 254, kind of 240 it's oversold, 254 it's overbought. It closed at 254. Model did a good job, right? These are the prices that were actually predicted the night before. So this is posted last night, and we closed at 215, 254.11. So at this point, you probably want to take profit, 0.5%, 1% gain. If it drops it back to 240, then maybe it's a volatile stock, then maybe that's, a buy signal. Because the trend, the long-term trend of AMAT is to continue going higher. Spider, same thing. The long trend, 1 to 3 months, is to continue grinding higher for spiders as well. And you can analyze, you can click on AI, right? And type in any symbol, Microsoft, and you'll be able to analyze Microsoft as well, or any other stocks, right? Using our neural networks. So that's aggressive power trader. That's reason why I'm bullish on the spiders, but it's still pattern of higher highs and higher lows. Even if we do have a pullback, I think it's going to be short-lived. So that's an example of aggressive power trader. Weekly power trader is similar. It's just we are analyzing different time intervals, and we're making predictions for a longer period of time. So this is optimal if you hold a position for a few weeks, maybe even a few months. So then you would use the weekly trader. An aggressive trader is more short-term trading. But same idea, you can trade stock, CrowdStrike, GE. You can use options. You can look at the options data, or you can participate in live trading room, watch the recording, analyze any stock, look at the history of all of our watch list. Everything gets updated on weekly basis, and except earnings power trade and aggressive power trader. That list gets updated on daily basis. So that's weekly power trader. Earnings power trader, we talked about, actually let's do both Delta Airline and JP Morgan. So I'm gonna go to our friends at Bar Chart. They actually provide you with the expected move analysis, right? So Delta Airline is gonna kick off the earnings tomorrow. Expected move in Delta Airlines is 8.5%, 8.71%. So potentially $4, 2% would be $8, right? 16%. Delta Airline last quarter was pretty volatile, right? Because we had record travel season, and I think 2 earnings ago we moved close. And this earnings, I think, well, it was pretty volatile, but it moved around 8% intraday. Pretty volatile price action. So that's expected move, right? Using expected move analysis. Yeah, usually I do it manually. I look at the money puts, at the money calls, divided by 2. Our friends at Barcha already do this, so you can see one standard deviation where the stock is might range between 51 and 42, and you can see implied volatility obviously is spiking, right? ID rank is very high. Going into the event was anticipation that there'll be a large move in Delta Airlines. So then I looked at the positioning. So expected move is around $7 to $8, and if I looked at the high demand, right, 55 strike, very large positioning. This is put skew, a call skew. So very high demand means dealers are short gamma. When dealers are short gamma, what is it? You know, even if you don't understand the concept of gamma or Greeks, it's not important. What is important is that you know that you have a very large position at 55 strike. So a lot of people think that by August 16 or by July 19th, Delta Airline would be a $55 stock, implying $9 move, right? So one standard deviation is $4, two standard deviation would be $8. So two standard deviation move, and a lot of people think it's going to happen, right? A lot of people think it's going to move, you know, 8 to 10%. Well, 10% it's more, right? This is 55. This is almost 47, $8 move. So it's a little bit less, more than 16, 17%. So very high. Their initial position is at 50 strike, right? 50 strike, and that's your 10% move, right? 460 plus 460, 80 plus 10%, 460, around $50. So if I would structure this trade, right? The next question is, do I want to have high probability of success, low return on capital trade, right? The next question to ask yourself is, in trading, you either have high probability of success trade, right? Or high probability of success of trade and low return on capital, right? That's scenario number one. Scenario number two, you have low probability of success and high return on capital, right? Scenario number two. And then how do you make a decision? Going back to game theory, right? The idea is that you never want to, it doesn't matter what I think, right? What's going to happen with Delta Ryan. What matters is what market participants think, right? So that's why you want to look at the option positioning data. You want to look at the gamma exposure to understand what majority of option market is telling you, right? So going back to game theory, sometimes you want to be long, sometimes you want to be short. In this specific example, looking at the estimated move and looking at such a high demand for either at the money, you know, out of the money calls or deep in the money, you know, short puts, right? That implies that dealers are short gamma. And if the stock tomorrow moves close to $50, we could have that, we could have $4 expected move, right? One standard deviation. This is what people are positioning. People are positioning that based on the estimated move analysis, the stock tomorrow could move $4. That would be one standard deviation. Two standard deviation would be 54, right? 54. So one standard deviation, $4. Two standard deviation would be $8. So that would imply that this is low probability of success event, but high return on capital, with the idea that probability is elevated, right? Even though two standard deviations supposed to happen only, you know, 1 or 2% of the time, because of this high position, high demand, it's going to happen more often, right? So this is where you're pushing your odds in your favor. And usually what I do is directional butterflies. So you would see me do directional butterflies. I didn't do it today. Not enough time, and I wanted to wait for JP Morgan, so we'll do it tomorrow. But in my personal account, I did do a butterfly where my middle strike is actually between 50 and 55, right? I think I did 54 strike. So I bought 50, sold 54 strike, right, and buy 60. You can do it for relatively cheap, right? Maybe 0.5% of underlying stock. But, you know, if it does move and it gravitates to, you know, somewhere between 50 and 55, then, you know, I will make money. If it doesn't move to 50, if the estimated move analysis, this is just an, you know, move up and down, but it doesn't give you any, it just tells you that 76% of the time, the stock will trade between 51 and 43. And then I would do the same thing, put butterfly, right? Directional butterfly. So you can do directional butterflies, or you can do condors, right? I can do call condor of butterfly. All right, so in this example, I did 54 strikes. So you can do 54, you can do 51 or 50, and then let's say 58 strike. So as long as it trades, to 50, which is one standard deviation move, or it moves here, 2 standard deviation move, right? If it trades somewhere in this region, you still make, this is where you're making money. If it never gets to 50, or if it shoots through the 58 strike, that's when you're not going to make money. So this is a low probability of success because stock has to move beyond 1 standard deviation, but high return on capital. And I'm doing this because the volatility is high. So that's butterfly. You could do the different, think of butterfly as 2 spreads, right? You have a, long call spread where you're bullish, and then you have short call spread where you're bearish, right, at different levels, but it happened to be the same strike price. So just butterfly is not complicated. It's just, if you understand spreads, then you know what butterfly is just 2 spreads. And this is a condor, right? This is a condor. The only difference, instead of middle strike having the same level, here you have 2 different strikes, right? So you can do, let's say, 50, right, 54, expand the range, right, from 54 to maybe 58, right, $4, and then 62, right, something along those lines. So again, this is going to be, return on capital here is going to be much higher, right? If I compare this versus this, right, this wins by probability of success, right? The probability of success is better here because you're covering higher range, but return on capital is better with butterflies because probability of success is smaller. We can put on this trade relatively cheap, but if you're right based on the estimated move analysis and positioning, it should be in this level. Any questions on butterfly, condors, spreads, and estimated move analysis? Any questions on position, Peter, Carlton, Werner, Mauricio, Jan, Louis? All right, and then JP Morgan, right? So this is Delta Airline, right? It did pull back, it's oversold. So any positive surprise, especially if everybody's traveling, you could have significant move to the upside. JP Morgan did pull back, also 2 standard deviation, lost earnings, but it continues to rally into the event with expectation that CPI data, maybe yield curve will be, get steeper, right? Get steeper, it's inverted now. But JP Morgan broke out and continues to make all-time high. So we'll see if we have similar reaction to last time or the move to the upside. But notice, unlike Delta Airline, when you're on JP Morgan, you don't have a very strong spike, negative spike, right? Pretty much July 19th and August 16th, you have big demand for puts and calls. So this is positive. So that means people are not buying, selling puts and buying calls, risk reversal. It means the people are hedging. They're buying, 185 strike because they're concerned that stock could drop to 185, and they are selling 220, around 185 to 220. So that's positioning, 185 to 220. Now you look at and that's based on open interest, right, where people opening and closing their positions. But in terms of estimated move analysis, if you look at JP Morgan, right, also spike in implied volatility, so you get a lot of premium in these options. And tomorrow, if we don't have 1 standard deviation move, there will be collapse in volatility, right? But right now, ID rank is very high for the weekly options, and then it's going to decrease. And expected move is 3.8%, so $8. So the estimated move is $8, and the spike is at 220. So again, a little bit more than 1 standard deviation. So a lot of people are positioned that it's going to move not by $8, but closer to 16, right? $14 to $16. So again, 2 standard deviation. So you can collect premium for 220 calls. You know, let's see how much premium is in 220 calls. Can you see it here? 220 calls, 19 cents. So it's a 10 basis points. So you have to come closer. So we said $8 move will imply 215. So you can get closer. 215, you get 30 basis points, maybe 217 and a half. So if you can select sell premium 32 cents on the short calls and 32 cents on short puts, collect 60 cents. So you can get 30 basis points. If you want to collect more, then you would come closer, right, to 215 strike. Right, if you remove August 16, you have pretty position at 215, right, and 220. So you can decide to sell 215, right, because there is already a relatively high position at 210. That's very close, but 215, right? One standard deviation would be 215. So for one standard deviation call, if you sell credit call spread, you can collect, at least on short put, 77 cent call, and if you collect 70 cents on equidistant put, right? Equidistant put, which would be what? 200 probably, right? Somewhere at 200, you can collect $17.50, $1.30. So $1.30 is about 0.5% of underlying stock, right? And so here, instead of being long volatility, for JP Morgan, I propose to be short volatility and sell premium on these strikes, right? Either this strike or this strike, and on 215 would be $8, 207 minus 8 will be 200, right? So 200 is close, but 195 strike, 195 strike at least. Any questions on JP Morgan and Delta Airline earnings season or any of the services that I outlined? So earnings power trader, you can sign up for SMS setting. When I place orders, you will see my orders and positions, and you have a list. Citigroup, Delta Airline, JP Morgan, Wells Fargo all announcing earnings this week. So there'll be a lot of signals in earnings power trader, and every day there's signals in aggressive power trader, and just like AMAT, I trade them almost on a daily basis. So those are the services. Any questions about services, your subscription, market condition, earnings, CPI data, inflation data? Any questions? Outside of Luis, I don't see anyone else. Peter Arnold, I know you joined recently. Thank you for your subscription. Any questions on your subscription? Or I think you had a question about dynamic power trader. Right, so dynamic power trader, today I closed Google. Right, so you can always go in. I closed half of the position. Right, a lot of these trades I do dollar cost average, and I put half of the trade. But today Google. Yeah, so I put a position to close. I closed at 323, and the rest of the position I want to close at 430. So in this case, I just overbought by one contract. So I trimmed the position, and now I'm looking to exit at 430. You can actually see if I'm closing position or if I'm opening position. Any questions? All right, guys, if there are no questions, you've been great. Thank you for participation. Next time, come with more questions and comments. I know it's 7 o'clock, 8 o'clock, some places getting late, but thank you for participation, and I hope to see you soon. Thank you.